Mortgage rates just dropped again, but is it a real opportunity or just more smoke and mirrors? Zillow just turned bearish for the first time in years, and it's got investors spooked. Meanwhile, China is playing chess with Trump's trade deal and flexing hard. Foreclosures are climbing, but is it the next 2008 or just clickbait? And finally, someone just listed a $45 million palace in Hawaii. We're breaking it all down, what it means, what they're not saying, and how to stay ahead right here, right now. You're watching the all-new Epic Real Estate Investing Show, where we take today's headlines, cut through the noise, and figure out how this all actually affects your money, your future, and your freedom. First up, mortgage rates. So Jerome Powell stepped up to the mic again, and boom, mortgage rates slipped. Sounds like good news, right? Well, maybe. Powell seems like he's genuinely trying to walk that fine line between inflation and recession. But let's not ignore the timing here. There's a long-running tension here between Powell and Trump. And with midterms on the horizon already, you know Trump wants the economy humming. Still, let's talk strategy. If you're waiting on the Fed to buy real estate, you're playing the wrong game. Rates are always relative, whether it's 4% or 7%. The only thing that matters is that your investment pays you more than the money costs you. Investors can create better terms by dealing directly with sellers. Retail buyers going through agents, less flexibility, but not impossible. If you apply investor strategies to buying your primary residence, you can still win. And remember, the bank isn't your only option. You've got private financing, seller carries, lease options, subject tos. You don't have to wait on Powell to live your life. Check out loopholelending.com. Now, Zillow just dropped a bombshell. They're calling for a 1.7% drop in home prices between March 2025 and March 2026. Now, normally, Zillow's been the eternal optimist in real estate. So when they turn bearish, people freak out. But let's be real. Is this a true crash signal or just a shift in public sentiment? It might just be a vibes thing. I mean, tariffs are up, building costs are rising, people feel nervous, but the underlying numbers, we have more people than we have homes. Household formation is still outpacing new construction by far. That basic supply-demand imbalance is what keeps prices sticky. So unless you're doing quick flips to retail buyers, this forecast should not be shaking you. Long-term investors, carry on. Now, foreclosures. Activity just ticked up again. 68,794 new filings last quarter, a 14% jump from the quarter before. Now, headlines love to scream surge in foreclosures, but context matters. We're still coming off of historic lows. Any increase looks huge in percentage terms. This is not 2008. We're nowhere near crash territory. There's no flood of distressed properties coming. Yet, should you watch it? Sure, but don't let it steer your strategy. Not yet. The opportunities worth watching are the individual foreclosures, not the macro trend. The smart investor's move here is to quietly ramp up marketing, get in front of sellers who might need options, and solve problems one-on-one. So while Trump is angling for a new tariff deal with the EU, China's like, cool story, we'll just court Europe harder. This is a power tug of war. Nobody wants to blink. And behind the curtain, both economies are quietly hurting, but neither wants to lose face on the world stage. Long term, they're gonna find middle ground. Don't worry about that. Short term though, volatility. Supply chains get weird. Prices get weirder. Investors and developers should be looking at material costs and timeliness carefully right now. If you're building, flipping, or doing anything that touches imports, it's time to double check your assumptions. Someone just listed a $45 million palace in Hawaii. Now, is this relevant to your average investor? No. But it is a reminder of something important. There is still plenty of money in the system. So if you're struggling financially right now, don't let headlines make you feel like the world is poor. The money didn't disappear, it just moved. Your job is to find where it went, who's holding it, and how to deliver enough value to get some of it back in your corner. The comments on last week's BlackRock video were straight fire. Y'all weren't just angry, you were laser sharp. BlackRock's not buying houses, they're buying the game. Why are we even working so hard when it's all rigged? Exactly. The power players own the builders, the land, and even the platforms you're watching this on. But here's the thing, they only win big when you stay out of the game. Don't let their power scare you into inaction. Use it to fuel smarter moves. There's no perfect market, but there is always a move to make. The Fed is going to do what the Fed does. China's going to do what China does. Your job is to own your side of the board and do what you do. And hey, next episode, we're talking about something that might actually break the system. You don't want to miss that one. Thanks for watching. Hit the comments, hit the subscribe button, love your faces, and I will see you next time. Take care.